Good day, all. Ira Epstein, and here we are with your financial market update. And this update is for Thursday, the 22nd of June, 2023. And the time I'm checking at 6:37 p.m. Central Time. I wouldn't be putting it out at 7:37. We ended a two-day period of the Fed, and that's good. Now the naysayers are going to come out. Now, who are the naysayers? The naysayers are the people that buy the stock index no matter what. The Fed doesn't have it right. They can talk that they're going to go back to raising rates. They're not. This is how they approach it. Even if they do, this is the last one. We're going to go into a pause. It'll be short because blah, blah, blah is going to happen. They have won the day. If you think that they haven't, you are so wrong. I was wrong. They won the day. I threw in the towel on it a while back and said, I believe them. They have the power, and that's what they're doing. Does it make sense to me? No. Will there be a price to pay if the markets really slow down? Yes. The problem is, and where they've been right, is we're not seeing that recession. Show me where the earnings, one quarter where the earnings have done what, if you will, is it Mike Wilson and other people from the different companies that come out and the bankers, and they go, you watch, you're going to see this. Well, eventually a broken clock gets right. You know that twice a day, but it's strange. That one hasn't. They're just broken in the analysis. And I know I can just envision it at some point when the market does correct, and you always get corrections. They'll go, I told you so. The problem is the market keeps ratcheting higher and you get that break. If they start saying it down here and you're all the way up here, as you come down, you're still not ahead of the game. You've missed out from there to there. Does that make sense to you? Because that is what's going on. Now, today was interesting in that Ford, an announcement by the Biden administration of a $9.2 billion conditional loan on battery factories that are already being built. So money is flowing in. The U.S. wants to be competitive, and away you go. That is what's going on. In the energy markets, because so many countries are raising rates and saying they're going to keep them high, it weighs on this. It's like a tax. I mean, the rates go up. Your credit card, you don't have as much money. If you're a business, you can't get loans as easy, or if you can get them, how do you pay? You're paying more than you were a year ago by a lot. It's a tax, and that tax is weighing on this. So what we have to see is, when do the Saudis say enough? That's what it's going to take. They'll say, hey, we have to do even more to support the pricing. Because if you get under 70, they're going to be very upset, all right? They have certain models that they're building. They're very dependent on a certain amount of cash flow, so you got to keep your eye on that. In the bonds and notes, you keep hearing the Fed say that they're penciling in, just like the dot plot, 2 more rate hikes, even though they went to the pause. Okay, I don't think they should have paused. I don't know if you remember Mr. Fisher. He was I think he was our vice Fed chair, and very bright. And they cornered him today. I was watching the interview on TV, and they cornered him. They wouldn't let him out of it. I think it was CNBC. And he kept not wanting to answer the question. And then finally it was, well, would you have done the pause? Because he's a hawk. He thinks higher rates are coming. And of course he's going to say, well, considering what they did and they wanted some time, yes. You don't leave that position and attack the head guy. You, of course, agree. What did it cost you? Nothing. All right? What he tells his clients is probably very different, but that was it. I find it interesting in one other subject that I'm writing about in my report tonight. The mayor of San Francisco is making a plea to developers to come in and raise some buildings and put up new buildings and give the downtown area a chance. And my question to him is, why? Have you ever been to downtown San Francisco? Gorgeous 10 years ago. But once it changes, like so many cities in America are doing, where the homeless take over the cities, where the police aren't empowered to raise them, and or if they are, the court systems let the people right back on the street. I live in one of these cities. with 75 shootings this weekend. You got to be out of your mind to go out into downtown Chicago, in my opinion, after 11 o'clock at night. You're looking for trouble. And this is what goes on. You have to change those things in our society. I don't have the answers to them. So it's one thing for me to be able to criticize this gentleman, the mayor, but he has to understand business. There's a reason Whole Foods is left, all these others, Nordstrom, everybody left. It's not safe. And if you think putting up a brand new $100 million, $200 million, $500 million building, just as an example, is going to attract people to an area that you at first don't solve this problem, you are wrong, and so is every other city. Get rid of the problem and empty areas, suddenly entrepreneurs go, well, why aren't we developing here? That's what happens. I don't have the answer to the problem, but you can't go making that call on businesses. They're not going to listen. Okay, that's my little bit for today. Now, when we look at the S&P, this is your correction week and you're down 0.65%. That's my point. So what I've been saying is, this was the week the Fed had the chair 2 days in front of everything. Lots of central banks coming in. Switzerland, Norway today came in. The Bank of England raising rates, saying that, hey, they're probably going higher. There's a chorus of that, including us, even though we went into a pause. That's the word. And that's all you can do in the market. That's the naysayers at work. When we look at the swing line, you have a pattern of a lower low, higher high. Yes, the market has fallen from near the 4,500 level back down into the 4,400 zone. When we take a look at the moving averages, you're still well over them and supports around the 43.66 level. I don't see a buy pattern. I see a market with a lower low, higher high. I see a market where it was running. The mania buying was the running of the upper Bollinger Band, sort of the running of the bulls in Spain. It is similar. And once it lets go and steps away, you get that correction. Very typical, and that's what has set in. And it's accompanied by the loss of an embedded reading. Now, let's discuss that for just a second here. When you lose the embedded reading, and I'll show you where it was lost, right here. You got the reading Wednesday of 76.77. When it's lost, unless you regain it the very next opening session, which it did not do, if it stays lost, it has to re-embed again. So you have to convert an overbought condition. You go from locked in super bullish to overbought, and then you can either go to it gets out of overbought, neutral, or it can try to re-embed. But to re-embed, it's got to go through the whole process again. When that occurs, it is not uncommon for price in the 18-day average as that overbought kicks in to try to make a run at each other. That is the phase you're in right now. I would not call this a successful test yet of that number, so I would expect more as this works itself off before you go back up for that high, if you go for that high. When we come to the NASDAQ, it's the same pattern. Here you got a bit closer, but you still haven't rung the bell. In the Dow, very close, within 30, 40 points. Hasn't done it yet, but again, as you come down, you get the early buyers because now the Fed is out of the way. We will see. I wouldn't be surprised if it takes a little more time to get up to that 18-day average. In other words, for the average to rise and price then to sink back towards it. The one that did, it's the Russell. And all of these are now overbought markets. When we look at the bond market, you don't get more sideways than this. Not at all. You just keep running on the 18-day average. This is a market that is whipping the bull and the bear. The guys that think it's going to follow through, it suddenly drops back on them. Then they think, oh, it's going to follow through to the downside, it rallies back on them. You stay away from sideways markets is what I teach my traders. Are we going to develop a bearish embedded reading here? Both numbers are under 20. Doesn't mean anything. You can't go by Friday. We don't know how we're going to close today. So coming in, they weren't. You just have an oversold market trying to reach to the lower Bollinger Band. Can it? There's certainly no reason on this chart that I can find to even think of being bullish. The question is, how deep does the market look to go? In the dollar index, You have the embedded reading. Therefore, I've been looking for a bounce. I think you have a shot at getting it now. And I'll be looking at the resistance of the 102.46. Now, you might say, well, Ira, you just got under that number. That's not really true. What really happened is the market has been trading in the dollar under the 100-day average. In mid-May, it had a spurt that got over it until mid-June, and it's back under it. To me, that is a bearish configuration, and I'm going to look for the resistance to come in between 102.83 to 102.47 to hold the market. As long as the embedded reading stays there on a bounce, I think the pros will sell. Now, if it gets over 21, I think they'll back away from that idea. In the euro, it's the flip-flop. I think that on a break, traders will be looking to buy. You have the embedded reading in place now. So I'm looking for reasons to get long euro, short dollar. I wouldn't want to put both on. Remember, if you're short dollar, 40% of it's made up of the euro. Keep that in the back of your mind. In the British pound, you'll say, well, what the heck? They went up and they raised their rates 50 basis points today, and the market fell. Well, what do you think this whole rally was about? This was the most broadcast and obvious rate hike coming. Whether it was 25 or 50 points didn't matter. It was buy the news, buy the rumor, sell the news. And that's exactly what this market offered you. If you lose the embedded reading, which it's trying to do right now, you could drop even further than this. There's the fear here that these rate hikes, this is not the strongest economy. It's got serious issues. And the rate hikes could crush this, and that's what the fear is. In America, we keep raising rates, and you would think the dollar gets stronger, and it did for that period. I think you'd agree with me. We're no longer at 100. We went up near the 103 in a fraction area there. And the reason is a strong economy with high rates. Why do you want to own other currencies? Now, if we're coming to the end of that and there's more room in other currencies to run against the dollar, you start looking at it the other way. And I believe there's a school of thought that thinks that's not right. The dollar's going to get stronger because the others are going to fail because they got to keep raising rates. And there's guys like me in that other camp. We'll see which one wins out. And yes, I do switch camps. I'm not loyal Democrat or Republican or the camps. I go where I think it's right. Bitcoin, again, we saw BlackRock and Citadel just jump in on that, and that's what got that going. In Brent versus WTI, you can see the correction. You can see how oil has its problems right here. So you have the swing line still bullish, but you're under the 18-day average. You haven't made since back here and here in the middle of June. This is a week and a half later than that, hitting the upper and lower band, and you're really just sideways churning yourself against the red line, the 18-day average. I tell trades like that goodbye. I've been in them. It makes you miserable. You tie up your money and you don't go anywhere. WTI is at least not hitting that every day like the Brent is, but it too isn't have any momentum that carries it and stays over the 18-day average. You got hit actually pretty good today. Let me carry it and show you just what this did. I consider a 4% break a big break. And the market did that. And you'll say, why? Well, everybody's raising interest rates. And that's like a tax on these economies. And as it does it, there's a slowdown. And then the first thing you go, well, how's industry doing? And each time we get one of these Fed readings or a regional reading, Dallas, Chicago, Philadelphia, I can go on and on, Richmond, it's not good. We look at manufacturing and it keeps contracting. That is the problem. We know the service economy is on fire. So that's going to be the areas that carry the day right now. And it's also the area that's taking the money away from buying goods and the like. As interest rates are higher, you don't have the same amount of money in your pocket. When we look at gasoline, as I said, I think it's stuck. I don't want you playing for the July rally. If it happens for the 4th, wonderful. You've had the big rally. Now the market's got to prove if it can do anything out of here, and I think you got to be careful. And in that gas, every day you see these events in Texas and other parts of the country, it keeps it well bid. But you are overbought. You hit your target. You hit it 5 days ago. I think it's time to be sidelined in that. But you hear me talk to you over and over and over About what? You're hearing me talk to you about you're hitting the Bollinger Band tops and bottoms. It is so important. It's a mainstay of what I believe in. If you haven't learned it, I have a simple way for you to do it. You can move your cursor to the top here. It'll take you to that area. Or I've created an ad. This wonderful fellow is going to show up in it. He's going to talk to you about it, why it's so important. Pay attention. You go to our website at iraepstein.com under education. Hit the click up there at any point, and let me introduce Ira. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.